Doji is resistance. Now, this Doji is resistance. Now, I've circled, in case you didn't see that, let me do it again on this slide here. I've circled that Doji. And the reason I've circled that Doji is to bring out a very important aspect. One of my Nissen trading principles, I have about 18 Nissen trading principles. These are core trading principles, either how people misuse the candles or trading strategies, trading tips. And we're going to go through a few of them here. The number is not important, like 6 is not more important than number 5, or 1 is not important than number 2. As I mentioned, we'll go through a few of them here. We won't go through all of them, but one of them is that a candlestick line or signal requires 2 criteria. 1 is the shape of the candlestick line. 2 is the preceding trend. Okay, when I answered the gentleman's question before about using candles as reversals or momentum indicator, most candles are mainly reversal signals. Okay, if the market breaks the resistance set by a candlestick signal, then you could shift into momentum. As a reversal signal, don't we need a trend to reverse? Exactly. So with that in mind, here we have a couple of Doji. Now, obviously, in the Forex market, you're not going to have a Doji gapping higher, so let's make the Doji over here. Now, the Doji on your left, is it coming after a move, a rally? Is there a trend to reverse? Yes. The Doji on your right, is that your right? The Doji on your right, is there a trend to reverse? No. It's in the middle of a trading range. Japanese call it a box range. And going back to the prior slide, that's what that red circle is all about. See the immediately preceding trend? And when I talk about the immediately preceding trend, I talk about the 2, 3, 4 candles before it. There was no trend to reverse. That Doji has no turning implications. Yes?
So you say it is in a box. See, as you're trading, you don't trade to the right.
Right. Okay, so the question is, it's in the box.
How do you determine?
Here. Has the market been trading laterally for 3? The question is, how do I know it's in the box? We don't trade to the right. In other words, we don't know what's going on here. Okay. So we're at this point. What's the last 3, 4, 5 sessions? No trend. No trend. And the same thing here. Okay. The Doji here at the green arrow, is that in the middle of a box range? Yes. Has no implications at all. There's no trend to reverse. And this is true with all the candlestick signals. We always have to think about the preceding trend. Over here, in this red circle. Now, it's a spinning top, but once again, because it's Forex, to me, it's the same as a Doji. Is it still in the middle of a box range? No trading implications. However, I love trading box ranges. Why? Because we have clean-cut support and resistance. So, okay, isn't that Doji in a trading range? Yes, but what's the difference? Where does that Doji emerge? The top of the range. Was there immediately preceding trend? Yes. That's a great short sell. Because the market's confirming a resistance area. What was the little clue we had before the Doji? A small real body, right? That's a great trading vehicle. So we're going to focus more on what I call candles in context as we look at applying the candlesticks specifically later in the session. But here you can see the Doji. Although these are all Doji in a box range, because one of these Doji emerged at the top end of the box range, we react to it very differently than we would with the Doji in the middle of a trading range. Okay, any questions on Doji? We'll take a, yes, and then we'll take a break.
I know we look at a chart like, I don't know how many time frames this one is. See if you squish it, like, if you compress it,
Mhm.
you get more data into it. So you can draw support and trend lines, like, like in this case, if you're only looking at probably the right side of the,
Tell me when to stop.
if you look at the other way, you don't see the left side.
Right.
So you just see the right side. You could draw a box of range,
The question is, you can draw a box range anywhere. That's not really true. To get a box range, you need at least 2 or 3 highs that are the same, and you need 2 or 3 lows that are the same. So for example, see? And then you have the lows over here. So what's going to happen is, let me go back here. See, I would view this as a box range like that. Okay.
Go back to the last one, the context. Okay. To me, it's easy to read the left side of the chart. It's the right side of the chart I have trouble reading.
Right.
So on this last spinning top here, if I look at the high, this high looks like it is matching the long white candle.
This one?
Yeah, the last candle, right side. That high looks like it's matching the long white candle to the left, right there. Right? So is that a range?
Okay, the question is, with this upper shadow here, it's confirming, okay, so we don't know about this stuff here.
We don't care.
Right, we don't care over there. Right. All right, so whoops. This is like a Picasso. When I'm looking at a chart, I'm not only going to look at 4 or 5 days worth of data. I go back at least 3 months of data. So I wouldn't be looking at just this action. Whoops. I would be looking at this action here. We just wouldn't be looking at this. There's no way I'd be looking at this amount, this little amount. These are daily charts, but it could be an intraday chart. So the question is, she's asking,